Hello, traders. It is Monday, the 22nd of April, 2019. It's 8:02 a.m. Chicago time on just a stunningly beautiful day, clear skies, and about 23 degrees centigrade and about 76 or 77 degrees Fahrenheit today. Loving it. Definitely feel very different when the sun is out. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Welcome to our 1500th broadcast of this continuous, let's call it mini crazy mini series or something. It's not really mini. So we're at 1500 today. Really happy about that. And we've been doing this a long time. There are two archives of these Trader Bites. One is on the channel that you're on now, but it was formerly held in a different channel. Anyway, glad we're still doing this and glad that you're here. This morning, the market is showing a mixed stance, really. The big thing to note today is that it is Easter Monday, which is observed in Europe, and so those markets are closed. So, the European markets did not trade since Thursday. Very quiet overnight session, although there have been some news events that kind of shook the market a little bit here and there. The key one being the the um, the U.S. is removing some of the sanction waivers from Iran, and that's likely to have a knock-on effect to crude oil. Crude oil up big today. It got up to almost $66. It's currently trading at 65.34, up $1.27 or 2%, up 2% from Thursday's close or settlement. So you better go fill up that tank today before this actually impacts the market. Also, in addition to that, China came out and indicated that it is likely to cut back on some of its easing operations, which caused a drop that came out at about 8 p.m. Central, 9 p.m. Eastern. So we saw a big drop there, and because the market opened overnight at about 29.10.50 where we closed, and it pushed up to 29.15, and it's currently trading 2900, has dipped to 28.99 in the S&Ps. Yeah, 28.99. So it's really it's looking like it wants to come off. The Nasdaq is the laggard today, down 37 points or 0.48%, followed by the Dow. The Dow's down 89, and the S&P's down 10 points basically, and trading within Friday's range. We're setting up. We've gotten toppy in the S&P. It seems like, although Friday's close was somewhat bullish. So we'll look at that in a minute. As far as what's on deck, what's on the calendar, existing home sales come out at 10 Eastern. It's a half hour after the open. Pretty light week in terms of, relatively light week in terms of economic releases. We do get new home sales tomorrow. We get initial claim. We get the crude oil, of course, on Wednesday, but we get initial claims on Thursday as usual, durable goods, and then on Friday we get GDP. The week is likely to be pretty light, I think. And also today, again, with the holiday in Europe, um, the trading is expected to be pretty light overall. It's expected to be pretty choppy. There is quite a bit of news flow still, so that may push us around, but overall, that's what I'm seeing. Let's take a look at what we expected on Friday for Friday's trading, on Friday morning for Friday's trading. Friday, the key expectation, I initially expected the market to push higher because we did sell off and put in a B-shaped profile on not Friday, gosh, I've got them all mixed. Wednesday we had a B-shaped profile. So Thursday, the expectation is we're likely to take some of that back, retest for buyers, and then get aggressive on the short side. That's your first scenario. In either case, you see it circled here. In either case, was looking for a test of 28.94.75 before the bounce. And what it ended up doing is it ended up doing scenario two, where it sold off, went right to 28.95, just missed that 94.75 by a tick, I believe, and pushed right back up into 29.15 is what we were expecting. Here's what actually happened. So again, scenario two, a slide down into 95, 28.95, 94.75, and then a push up into 29.15 and a quarter to end the day. And here's what we actually got. That's what we actually got. There it is, the slide down and push right into 95 evens, right? Just right on the dot. 95 evens, leaving the naked point of control open and then walking back up. So we had a range extension down. So this is a range extension down here. However, notice on the profile that the taper is pretty tight. That's acting like an excess low there, below the IB, below the 97, and then the market took it right back up and broke the IB high. So that puts us in neutral territory, closing just outside of the IB high in the upper quartile. So Thursday's trade looks like neutral extreme to the upside, which we expect would carry into a continuation on the reopen, which we got. So the important thing to note is we pretty much hit scenario two on the dot. We could not get to 29.15. It was just too late in the session once we pushed up there. But look at our overnight high, 29.15.75. Got to pay attention to those stock zones. And so overall, the plan worked out, but we didn't quite get the timing wasn't quite right. Here's what things looked like on the reopen. As I said, the market pushed up into the 15. There's quite a bit of liquidity up there. I'm seeing liquidity up there now. And then it pulled back to the prior high, consolidated, and then we got this China news here and pushed all the way down to 29.01, recovered, couldn't come back to the mid, stopped just short of the mid up at 29.08, half or so, and then just drifted down for the rest of the session. Again, Europe's closed, so we don't see volume picking up down here. Once the Europeans open, usually we see some volume kick in and some volatility there. In fact, it's probably no secret that this product's been trading a little more structurally overnight than it has during the day. Keeping an eye on this morning, keeping an eye on 290750, 290750 for the split, and seeing if the market is able to get back up and test that area or not. That is likely the first short opportunity this morning, looking for a rotation down into 28.88 or so if we have any sort of volatility or participation today, which don't, don't bet the house that we will. We're likely to be pretty slow. Again, there's a fair amount of geopolitical news flow. Not sure what that's going to lead to, but still, we're looking at those targets. So that's the review segment. There's not much else for me to cover. I'm going to keep this short because, again, it's a holiday in Europe and there's not much to talk about today. So what are we looking for in terms of this session? What we've got today, remember, we have a number, existing home sales, which is not an extremely important or big mover. Where's my Vol Sigmas? Vol Sigma 1 up is 28 and down is 28.92. So 28, 29, 28.50, 28.92. Okay. So what are we looking for today? We're opening in range. Not sure if there's value based on Friday's action. We can argue that there is value, but I am keeping an eye on this 2907 area right here. My expectation this morning, we open, we revert back, we push back into 2905, potentially to the 7. And then I'm looking for an impulse down again through the 2900 century figure, pull back, consolidate, make a bunch of noise here, and then take out this 2894.75 finally and start to walk itself down into 2890 and 2888. This is what I'm expecting this morning. So the key areas below us, 2897, 2884.75, and 2890 and 2888. Those are the key areas below. I'm expecting the tide to I'm expecting the motion to be to the downside mostly. If we get any motion at all. Traditionally, this day is very quiet. Responsive, responsive, a responsive push is the next likely scenario that continues higher. So we push through the overnight low 28.99, start moving towards 97. We get a response up, an impulse up, and then start to push towards that 2907, consolidate there, and then take out this weak high that we left behind from Friday and start climbing towards that 15 on the secondary scenario. That scenario is responsive up and is more bullish. Now, if you recall that, Wednesday we put in a high, higher high and a lower low, and then we followed it Thursday with a lower high, which starts us one time framing down on the daily. If that doesn't get broken, then we're likely to see some pretty good follow through to the downside, down into 28.78 beyond there over the next couple of days. It's starting to really look like, if we don't take out this weak high that we tried for on Friday, we are very likely to continue to push lower and to start to repair some of the rally structure we've left behind before. Okay, so that's that. I did put up a poll that's up for one day, I believe, according to Twitter rules, on my Twitter, twitter.com/futures trader 71. You don't need to have a Twitter account to see it. But I'm very interested in why you trade. Why are you here? Why are you trading? What are your goals? It ties in with the conversation that I'm going to be having on Futures IO on Thursday. On Thursday, I'll be on Futures IO at 4:30 Eastern to introduce the Micro E-minis. This is a product that I've been pushing for since about 2012, and um, and we're going to discuss why it's important, what aspects are important, what the costs will be, how it should be used, what plan you should put together for it. I'll go over the elements of the important elements of a trading plan for it. It's a product that I think most people should be trading who are not consistently making money. It's better to go there and work out the kinks live than to stay on sim at the lowest cost possible, lowest cost in terms of risk possible. So please find that poll, twitter.com/futures trader 71, and let me know what your response is. I'll use the poll results in the discussion. And also, I'll provide the links and everything else for Thursday's event. Thanks for tuning in. Again, thanks for joining. And this is our 1500th broadcast, and hopefully many more to come. Thanks for being here. Take care.